Your insurance company is betting you never read this. They're right. That $15 monthly renter's insurance policy you bought to protect your laptop, bike, and clothes, there's a 78% chance it won't pay a dime when you actually need it. A 2025 study by the Insurance Information Institute found that only 22% of renters' insurance claims are approved without a fight. The other 78% get denied or severely underpaid. Why? Because you missed one line in the fine print. And that line is costing American renters an estimated $23,000 in out-of-pocket losses every single year. Here's the truth. Your landlord's insurance covers the building, not your stuff. So when a burst pipe destroys your couch, your landlord's policy pays for the drywall, but your policy should pay for your couch. Except it won't. Not if you made this one mistake. According to the National Association of Insurance Commissioners, the average renter's insurance claim is around $17,000, but the average payout is just $4,200. That's a $12,800 gap. Why? Because most policies have a replacement cost clause that sounds great but actually screws you. The policy says they'll pay replacement cost, but only if you actually replace the item. If you just want cash, they pay actual cash value, which deducts depreciation. Your 3-year-old MacBook that cost $2,000, they'll give you $400, and that's if they approve the claim. In 2024, the Federal Trade Commission reported that insurance bad faith claims rose by 34%, meaning insurers are finding more ways to deny payouts. This isn't a hypothetical. This is your money. Think of your renter's insurance policy like a bouncer at an exclusive club. You paid the cover charge, you're on the list, but the bouncer has a secret list of unacceptable items. Your phone? Fine. Your laptop? Maybe. But your engagement ring, your camera gear, your vintage guitar collection? Those are on the secret list. The bouncer won't let them in unless you specifically named them and paid an extra fee. Most people don't know the secret list exists, so when you try to walk in with your $5,000 camera, the bouncer stops you and says, "Sorry, you're not covered." That's the reality of renter's insurance. 1. The mysterious personal property limit. Most renters' policies cap personal property coverage at $10,000 to $30,000 total. That sounds like a lot, but add up your stuff. A $2,000 laptop, $1,500 phone, $5,000 in clothes, $3,000 in furniture, $2,000 in kitchen appliances, $1,000 in books, $500 in tools. That's $15,000 right there. If you have a $10,000 cap, you're $5,000 short. And if you have high-value items like a $10,000 engagement ring, that cap won't even cover one item. The fix: do a home inventory app, total your stuff, and buy a policy with a limit that actually covers it. 2. The sneaky sublimits on jewelry, electronics, and art. Even if your total coverage is $30,000, most policies have subliminal limits on specific categories. For jewelry, the typical sublimit is $1,500 per item. For electronics, it's often $2,500 total. For art, $1,000 per piece. So if your $8,000 wedding ring gets stolen, you're only getting $1,500. The difference is $6,500 out of your pocket. To fix this, you need a scheduled personal property endorsement, a separate rider that lists each high-value item and covers its full replacement cost. This costs about $1 per $100 of value per year. That's $80 a year for an $8,000 ring. Worth it. 3. The actual cash value trap versus replacement cost. Your policy says replacement cost, but read the fine print. Replacement cost is paid only after the item is replaced. If you want cash instead of buying a new item, they pay actual cash value, ACV, which is replacement cost minus depreciation. A $2,000 laptop that's 3 years old has an ACV of maybe $400. So if it's stolen, you get $400, not $2,000. And if you don't have the $2,000 to buy a new one first, you're stuck. The fix: look for a policy that offers replacement cost on a cash settlement basis. Some insurers do, but you have to ask. Number 4, the named perils loophole. Renter's insurance covers named perils: fire, theft, vandalism, water damage from burst pipes, etc. But it does not cover unnamed perils like floods, earthquakes, mold, pests, or sewer backups. If a flood from a storm destroys your basement apartment, you get $0. If a mouse chews through your wires and starts a fire, You might be covered for the fire, but not the mouse damage. The fix: buy a separate flood policy through FEMA's NFIP or private insurers, and consider an all-risk policy that covers everything except specifically excluded perils. All-risk policies are more expensive, but cover more. Number 5. The liability gap that could cost you your savings. Renter's insurance includes liability coverage, typically $100,000 to $300,000, that pays if someone gets hurt in your apartment and sues you. But that's often not enough. If a guest slips on your wet floor, breaks their neck, and incurs $500,000 in medical bills, your $100,000 liability limit leaves you on the hook for $400,000. That could wipe out your savings, garnish your wages, and force you into bankruptcy. The fix: increase your liability limit to $500,000 or $1 million. It costs an extra $10 to $20 per year. Also, consider an umbrella policy that kicks in after your renter's liability is exhausted. Here's your one concrete step. Tonight, grab your phone and take a 10-minute video walkthrough of every room. Open every drawer, closet, and cabinet. Narrate what you see: brands, models, estimated values. Upload that video to a cloud drive. That's your proof of ownership. Then, tomorrow, call your insurance agent and ask 3 questions. What are my subliminal limits on jewelry and electronics? Is my policy replacement cost or actual cash value? And can I add a scheduled personal property endorsement? Do that, and you'll be in the 22% who actually get paid. If you want to protect your family from the next financial trap, watch this video next. The secret clause in your health insurance that's costing you thousands. Subscribe and hit the bell so you don't miss it.